Well, good morning, everyone. Glad that you're here. We're going to be getting started. It is a Friday. It is a no news day, and we're going to do some trading on the NASDAQ. So if you want to join, we're going to be talking about ICT concepts. We're going to be watching price action, reading price action, potentially taking some trades depending on if there's any setups. So come along, join, and let's have some fun. So, like I said, no news today. We hit some all-time highs yesterday. We had a nice pullback yesterday, but we still have not hit the 50% mark. So, if we were to look at this, let me just pull the 15-minute up here so you can see it. Here is the range from yesterday. We have, for the past 2 days. So from this low to this high is our dealing range. And as in regards to a dealing range, it's where anywhere you have a significant leg of price action, and when you trade back into it, we reference the leg to the left on price action on the right. And so we have this leg on the left. We have our equilibrium sitting right about here, which overlaps beautifully with this 15-minute BISI, sitting at approximately 18,577. And then we got price action sitting in the premium zone of these quarters from this low to the high. So if we have, this is equilibrium, above this is premium, and above that is extreme premium, or just this is whole section would be considered premium. So we're going to watch price action. We're going to look to see if price wants to move any lower. I would like lower, but when you are in an all-time high scenario like we are right now, you really don't want to fade all-time highs. And it's not a good idea. You'll get burned many times. So that's what we're watching here today. $15-minute has closed above this right here. We are still sitting in this area of a breaker. We got a high, low, a higher high. And it's on the left side of the curve, so that's why I'm referencing it. Here I'm just running some levels, trying to see where potential range we might reach to if we do one standard deviation. So from this high to this low is 1, and then we go to 2, and that makes 2 standard deviations. Bye, Jaden. We want to see how price reacts, see if it's actually going to want to move that. We don't know if its price wants to move lower. That's what I want. But we have this equilibrium, which is really where I want to see price move to before it wants to move higher. If we take the same leg here and we go to this high, price is just about reached equilibrium here, which is where we would want to see price come if we moved lower. If it wants to retrace and then move lower, ideally we want to see it hit premium before it moves lower. So just different areas of just confluences that I look for to make sure that things are aligning. Gonna have a good day today. Today is the day the Lord has made. I will rejoice and I'll be glad in it. So favor is in our direction. Father, we thank you for provision. Thank you that you will lead us and guide us in the markets today. Nothing significantly happening right now, as I said before. Really what I want to see happen is this tagged. This is equilibrium for this range from the all-time high to the low of this morning. I would like to see that tagged. Let's move out to a higher time frame. Let's just see where we are at the end of the week. So we have, here, let's pull you in here. On a monthly basis, might be a little messy. We reached all-time highs. Okay, where do we go from here? We could go higher. We could go lower for a monthly context. So it's not very clear on the direction that the monthly candle wants to move. I can tell you that we have about another week left. So if we look at the weekly, we have Monday, Tuesday, Wednesday, Thursday. This is all extremely bullish. Excuse me. This is the first April. There we go. So we have May 6th. This is the first week of May. This is the second week of May. So the first week can be considered the manipulation. The second or first week is the accumulation. Second week is the manipulation. Third week could be the distribution. So next week we could see a potential pullback when we look at the weekly context or the monthly context of the power of 3 or AMD, accumulation, manipulation, and distribution. So if we go into the daily though, let's look at the daily here. The daily started on Monday. So here's Monday, Tuesday, Wednesday, Thursday. We've had a very bullish week, a high on Thursday. Honestly, I expect some type of pullback for a Friday. We got this large daily fair value gap sitting right there. We could reach all the way down to the consequent encroachment of this fair value gap, which is this green dashed line right here. That is a possibility. Good morning, Vatal. So on a daily context, we really want to sit down, figure out where price could move on a higher time frame to give us context on what could happen on the lower time frame. So because of how bullish we were, and we really hit this week's target. I mean, this week's target has been hit. That makes Friday, today, very low probability trades because the weekly target has been hit. Why do I say the weekly target is hit? I mean, come on. If you can't say that a target is the all-time highs, then you need to understand trading 101, which is liquidity. This was a major drop. When you start seeing this happening, well, first thing you go is here. Well, is this the draw on liquidity? Okay, well, we exploded through that one, all of these, and we hit all-time highs. So that, in my book, especially it being on a Wednesday into Thursday, tells me that more than likely this week's goal or liquidity has been targeted. So it may not have a set of instructions to actually go for a specific level. We could see, what do they call Friday? I'm drawing a blank on the term. Seek and destroy. Seek and destroy conditions we could really see. What does seek and destroy mean? Meaning it's going to grab liquidity and then run the other direction. It's not going to have big runs. Now, I could be totally wrong. Price can do whatever it wants, but these are principles. We go into the market understanding that this is a scenario that could happen, and we got to trade accordingly. We got to size accordingly to make sure that our risk is appropriate for the potential outcomes that we may see. Okay, so on a higher time frame analysis, I would like to see a bigger pullback. We have this 50% sitting right here. We could wick down here and wick back up. That's totally possible, but I would like to see that push lower. If we go to the 4 hour, we still have our 50% right here. We have a 4 hour fair value gap that we're sitting in right now. On the 4 hour, we got 5 minutes till open. Not planning on doing anything before then. So here's your 4 hour fair value gap, and we are still we have not hit equilibrium. Now, if price hangs out up here and does not get down here, well, that is a very bullish signal. Now, you're going to have to wait a while for that to play out because each candle is 4 freaking hours. So let's pull this to here. Let's just leave that. Let's drop down to the 1 hour. Let's see what we got on the 1 hour time frame. So we got a high, low, higher high sitting right here. There's a bearish breaker on the 1 hour. Now, what I like about this bearish breaker, it's sitting right above the equilibrium of this leg here from this high to the low. This red line is equilibrium. We're sitting right above that. So that's a potential point of interest on the 1 hour. On the 1 hour, we could drop this down to the wick low, and that's even almost better. Look how close that is, and look how it's delivering right now. Look at that. Okay, look at this on the 15-minute. Wow, we're super close. I'm gonna go down. Let's go down to the 5-minute. Look at that right there. Look how it just tagged that breaker. It didn't get up to the 50%. It stopped at that hourly breaker, and it changed directions on the 5-minute. That is very, very attractive. Now, it was before I would want to do anything. 9 a.m. I was just getting on, so we aren't going to see anything from this. We could see price come back up here and touch it again, and that could be a potential entry, but we got to look for different type of confirmation for that. So we have reason to believe we may see lower prices. That's enough for me to feel confident that for any type of trade where I want to put risk on the table, I want to see prices run lower. I want to run for this 50%, for this daily level right here. That is what I potentially would be looking for. Sorry if I have too many lines on here. I'm trying to look at the higher time frame to see where we are in premium and discount just to confirm potential interest. I'm really not interested in going higher, even though I have this marked out, because I want it to reach down deeper into this daily fair value gap, ideally to the 50%, but we could see price push back towards this high and still want to move lower. This would be a good target. It's really clean, but I want to see price be aggressive. We got still 25 seconds left on this candle. I don't want to get in right here, even though it just could go without us. We need it to come back down. I was watching this 1 minute fair value gap, but as you can see, this candle just closed way too high. So that just invalidates any opportunity. I don't want to get here and have it retrace. This is from 61. down to the close, which would be 48, you're looking at 12 handles of a drawdown, and that's right to the fair value gap, and that still could be a legitimate. So if we come back down, we find some support, may look at that as a long, but I don't like how high we came because we're redelivering off of this 5-minute fair value gap right now. I would love this to break. I would love this to close here and then target this low in the daily. The 5-minute 105. Yeah, you got an inversion right. All right, so price is moving aggressively lower. There's still 42 seconds on this one. Still a lot of time on this candle. It makes it not as you just got to wait. We want to be sure that we close below here. If we close below here, especially since we didn't grab this high, I'm interested in this actually running lower and redelivering off of this 5-minute. What do we got for the 15-minute? All right, that is a close below. We're gonna
order filled.
Take this. Targeting the low. Stop loss is a close above that fair value gap. If this doesn't work, then we're looking at chop. Waiting till 950 is not a bad idea. And are we gonna? We got 6 seconds to see where we close. Still active trade, still within the rules. I'm not going to let it run much higher than where it's at. So we're still watching this. Morning, Tiff. We are in a trade right now. I got in on the break of this fair value gap low, targeting these lows right here. I'm going to do a manual close. I want to see if we run below this. See if we have a large candle. I'm going to set a limit order
submitted
down around 1627, and I'll drag it up to close it if I need to. We really don't want to see price come back up. If price comes back up here, that's not attractive. All right, I like that push. Let's keep going. Let's move lower. Come on. There we go. All right, there's a wick below. We're going to take it right there and close that trade.
Order filled.
Now see how I just want to talk about this trade because I'm proud of myself. I'm liking the analysis that I gave. We saw this fill this opening range gap. Normally, I would be looking for a long, but because my bias was short, and on top of this, this candle closed so high above this fair value gap sitting right here. Originally, we had this fair value gap sitting right here. This was a legitimate entry. This would, if this closed here, this would have been, I would have taken this. Because we filled the opening range gap, we had a swing high here. We had room to move higher before we continued lower. But because of how high we closed, we have to take that off the table. So we took that off the table. What did we do? We didn't hit these highs, but we redelivered from this 5-minute fair value gap. Let me show you on the 5-minute right here. So we have this green candle that tagged this fair value gap, and then we start moving lower. Now, if people were still bullish and didn't understand that we have a lower draw, potential draw on liquidity, people would have seen this as a reason to get in and get long. I even mentioned it. But because my bias, again, was short, I chose not to do that and chose to get in for the inversion of this to target these lows. So I ended up playing this right about there. That was really, I didn't have a stop loss because I was waiting to see if this candle was going to close above this fair value gap. Well, we didn't, so that means my trade is still active. Now, if this candle instead just went higher and higher and higher, at some point I have a certain amount of risk I'm willing to take. Normally it's about 10 handles. We were really close to 10 handles here. 10 handle, we were at that 7.5 handles. So this is 10 handles where it stopped. So I knew that I wasn't going to be willing to take it much more, maybe 15. But we didn't, and we closed back below it, so that made this trade still an active trade, targeting these lows right here, which would have been just about 9 handles. I ended up closing it, closing a little less than, what I say, 10 handles because I didn't get the fill that I wanted. So that was the only trade we've taken so far this morning, targeting that low. Now that we've gotten that done, now we just wait. We either close the day and enjoy the weekend because we're up on the day, which we could absolutely do, or we sit and we wait and see if anything forms. But to be honest, it's going to take some time for stuff to form. We're in the 10 a.m. macro right now. So price is in a time frame where it can be given a set of instructions for it to run and for it to run quickly. But it may not, because it's a Friday. Seek and destroy. We hit our weekly target. I need to say that again. I'm saying it to myself, to be honest. We've hit our weekly target. Our weekly target was the all-time highs. We hit it. Now we could literally just chop, run, grab liquidity, run back and forth until we knock people out. So as a trader, you have to decide what kind of risk do you want, and is this a high probability trading day? Well, for me, what seek and destroy and understanding that we've hit our highs tells me I'm not looking for these longer runs. I'm not looking for 20, 30, 40 handle runs, which I'm not even there yet, quite to be honest. My targets usually are 10 to 15 handles. That's my sweet spot. I want to hit those 10 to 15 handles, get in, get out. I want to mark my profits, and I want to build my accounts. I'll eventually move to making those longer runs, but today is not one of those days. I just know today's not one of those days. Could it run? Absolutely, but it's not a day that I want to find out if it is or isn't. So I'm going to take short scalps, get in, get out, 10 handles, 15 maybe, on a seek and destroy day, or what has a high probability of being a seek and destroy day. All right, look at this. This is what I like here. If we look at the 15 minute, I'm looking at the extended chart. Here's a 15-minute fair value gap right here. Look how we've been sitting right there. What did I say about seek and destroy? Price will run down, grab the lowest level fair value gap. Now there's lower levels here on the 5-minute. There's a tiny, tiny, tiny one right here we could reach for. It doesn't have to. This is the obvious one. But price will run, grab these areas of liquidity, and then potentially move higher. Now, we're pushing through. We got 2 minutes left on this 15-minute candle. And that's a nice aggressive candle lower. We just tagged that 5-minute. All right, let's go down to the 1 minute. I'm doing price reading. This is learning for me right now. We got these relatively equal lows. Wouldn't surprise me if we try to go for that. All right, where are we at here? All right, what do we got? Do we have a fair value gap that's sitting anywhere? It would be this fair value gap right here. I'm just going to put a low. I'm going to put just this horizontal line for this. Well, there's this one here, so let's just do that. Make this solid, and we'll make it black. All right, now see how price went in there, filled that, and look how aggressive it's going back up. That's signature and price for a seek and destroy day. If you didn't know that, you would have potentially got in this and targeted this low, and now you're getting stopped out. Right now, you're getting ran over by price on this aggressive candle higher. This is aggressive. When you have that and that, that's aggressive. I don't care what you tell me. That, if we had a fair value gap in here, this would be a beautiful setup. You probably have one on the 30-second. You have one right here on the 30-second you could have got into, targeting this swing high. And there's a high probability that's going to work out. So you would have got in here. Oops. You would have got in here, targeted that swing high right there. It tagged right now. You'd move your stop to break even. You would either sell your position, or you'd move your stop to break even, targeting these equal highs, or even higher, these highs sitting up right here. But there's a high there. This is probably going to, this already worked. This is already a winning trade. There just was not an entry that I saw prior to this 30-second, and I just didn't have the 30-second open. Okay. So that to me is the epitome of a seek and destroy day, where we don't grab liquidity. We just fill an imbalance on the lowest time frame possible. I mean, we could go down to the 30-second, but to me that's just overkill. And we go the other direction aggressively. Now, could we stop and continue lower? Yes, but what I'm talking about is price isn't just moving quickly lower. It's designed to make you think it's going lower, get you out. Make it think it's going to go lower, get you out, or the other direction. So this is why you have to be so careful. And these inversion plays are actually really great for this, because more often than not, you are going to move your stop to break even relatively quickly. You may get stopped out more, but you don't lose any money. You lose the cost on the commissions, but you are more likely to get wins on these than you would trying to do a breaker or anything like that, where you could see price run against you. So these inversion plays are nice. Let's go to a higher time frame. Let's go to 2 minutes, see if we have anything here. Yeah, I mean, there is nothing here. There's no opportunity. There's no breaker opportunity. There's no inversion opportunity. Literally, if you trade turtle soup, that's your opportunity, and I don't. It's right now for me, to be honest, it's just too advanced for me. You could have used this. I like the way this candle looks. This, we have a low, high, lower, low. I'm looking at this as a bearish order block. The bearish order block here, and it's significant because it's larger. It's redelivering from a higher time frame, or redelivering. And then where's the mean threshold? I just marked out from wick to wick on that candle where price just stayed below. That's a good signature in price. I don't focus a lot on order blocks, so I don't reference them. I use them usually in my post analysis just to see how price moves. And the more I do it, the more I'll use them in my trading. But right now, it's just recognizing them in price action. So look at this. So we have a bearish order block. We move lower in a way, and we come back up here. This could be a propulsion block. A propulsion block is another bearish order block that trades into a higher bearish order block. And how you recognize a propulsion block is the next candles move aggressively away. We're going to see if it actually does that. If it doesn't, it tells us that price isn't wanting to aggressively move lower. This is a signature in price to tell us that it wants to move lower, and it wants to move lower quickly. Some people will get in here, get in at the highs of these. So if we were to pretend these two red candles were in here, when price comes into this fair value gap, when it comes up to equilibrium or to the mean threshold, and we still have a bearish sentiment, you'll see people take this long, expecting that this candle turns into a bearish order block or a propulsion block. So they'll get in short here, price moves close below this candle, and now they're set. They are now confident that there's a good probability we run for this low at least. It could wick back up after, but there's a higher probability that price wants to run this low and move lower. So that gives them the confidence to hold the trade to that low and to see it play out. I wasn't watching the 4-minute. That's why it's very valuable to thumb through these different time frames for the charts just to see how they play out. Because when you look at the 1 minute, it looks nothing like what we saw in the 4-minute. Nothing like it. If you guys do have questions, I'm just talking about what I'm watching. If you have questions as we're going through any of this, let me know. Or questions on entries or trades or anything like that, I'm happy to answer those questions. Excuse me. Happy to answer those. I say that because, we don't got 500 people in here, so the chat doesn't move that fast. I guess that's the benefit of a smaller live stream, is I'm able to be more personalized in answering questions. See how we didn't take out this low? That's sus, man. That's a seek and destroy. I don't like that, especially on the redelivery of this fair value gap, moving lower. We have a breaker right here. I'm a very low probability breaker, but It overlaps with this fair value gap. I wanted to see it move lower. This is why you just run for these short swing highs and swing lows. Now, if you're thinking, well, okay, great, inversion gaps are great. So can we play this inversion gap? Can we play that? My answer is it's a B plus setup. And the main reason for that is we didn't run this low. And we are outside of a macro. We're at 10:15. If we are closer to the top of the hour, bottom of the hour, I would be more interested in something like this. It would make it maybe an A, but not an A plus. A plus is I want to see liquidity ran, stops grabbed, like this candle right here. This would have been, I would have taken this because we filled this 1 minute fair value gap, leaving these lows with the expectation we could go back down. But this aggressive candle told me everything. This candle higher, and then the next one, if there was a fair value gap anywhere in here, I would have taken that. Targeting this high and this high right here. Stop to break even here, targeting here, maybe leaving a runner to go there. We obviously didn't hit that high, but that's what happens on Seek and Destroy days. Let's take a look at the 4 hour real quick. I'm seeing, I like this, and we're just going to bring it up. Confirmation on price. That's really what we're talking about here. So we're in a 4 hour here. We also have a 4 hour fair value gap right here. And we've closed below that. The bodies have closed below this 4 hour fair value gap for 1, 2, 3, 4 for 16 hours. 16 hours, it has respected this level in regards to the bodies closing below it. That tells me there's a likelihood we want to see lower prices. That's a good sign. That's a good sign as far as price goes. What does that mean as far as opportunities though? Well, right now, if we're still on the 4 hour, I'm going to just take this one off here. Okay. We have, let's remove that. We have this high to this low. So we have this dealing range right here, high to low. This is where equilibrium's sitting at. If I'm going to go short, I'm interested in this too. Let's see what that looks like. If I'm going to go short, I really want to see price push a little bit higher and create an opportunity for us to go lower. Specifically from this 4 hour, from this swing high to this swing low. This is a dealing range. We use this in reference on where price wants to go to. So right now, price is in discount within this dealing range. If we were to zoom out and we go from this low to this high, well, from this low to this high, well, we're still in premium. So we have to use different legs in conjunction with each other to figure out where price wants to go. So price here, we still haven't reached this larger leg that we are in. Now we look at the potential retracement leg, or reversal leg. We don't know which one. This could be a reversal. This could be just a retracement then to move higher. We don't know yet. But either way, if price wants to move higher, for me to be interested in a long, I want to see it come closer to this equilibrium point, this 50% mark right here. If we're going to move lower towards that 50% mark, well, I want to see price come closer to this leg's equilibrium. We did right here. We took a trade off of that, but right now we're not in a trade. So if we want to see another opportunity, we want to get closer to premium from this high to this low. Premium is above the 50% mark. We want to be closer to that. To then potentially go lower into that larger leg's equilibrium for a potential reversal or for a potential continuation higher to the all-time highs, or price just continues lower from that point. So that's how we reference these legs. We look at these based on where equilibrium forms. You can also break them down into quarters. You can also break it down based on quarters if you want. You still have your equilibrium, which is the most valuable, but now you have your 75% level, your 25% level, and you can see, look at where that 4-hour fair value gap is sitting in relation to these quarters. The 75% mark is overlapping beautifully with this 4-hour range. We like to see confluences in price. So when we pull this Fibonacci tool and we do the quarters, where are the quarters at? This is overlapping with this fair value gap. That's significant in my book. That means, hey, this is something I want to pay attention to. So we could see a level of resistance here if we want to move down to this level. That's if. So we use these to try to figure out, does price want to go down to here? Okay. Well, we could find some resistance here, which is closer to equilibrium on this leg right here. Well, let's see what happens. And we're looking at a 4-hour time frame, so much time passes on just one specific candle. You can do the same concept as we move lower and down into lower time frames. You can measure legs. So from this high to this low, this is the manipulation leg, potentially if we want to move lower. Here's one standard deviation from that. You can also do the same thing by just doing the close of the high and low. If we do that, here's one standard deviation on this move right here. This is beautiful. This is a perfect illustration of using the Fibonacci retracement tool for targeting purposes. So this high to this low, we use this high's wick, this low's wick. Okay, this is the one standard deviation. Well, we haven't seen price hit there yet. It could go there, but the algorithm will reference these wick points, wicks highs and wicks lows, but also they'll look at the close highs and the close lows of the manipulation leg and look where that candle lands. Look where that one standard deviation lands. Right there. So price has come into that multiple times, relatively respecting that level. So we use these as targeting tools to know how far could price run. Maybe it wants to reach to the 1.5. Well, it almost reached it. This is great displacement. So I'm convinced that price wants to move at least to these highs right here where the breaker's sitting. The only question is, do we have a potential entry that we can get in on? And if you remember what I told you in this leg here that made these the lows, there's not any fair value gaps. So it makes for a breaker opportunity really hard. Your only opportunity you could have took was the close of this candle for an inversion, which is off of the bounce of this fair value gap right here. I was talking about higher time frame stuff. This would have been interesting. This would have been worth looking at. Why? So we have a low that doesn't make a low. That does not make the final low. So I told you I'm not interested in price breaking up into here. I would have not taken this entry if it closed above this fair value gap. But what do? We come back down. We find support on another fair value gap. This fair value gap right here. When you bounce off of a fair value gap and then break through the inversion, that makes this more attractive. So this would have gone from a B plus setup to an A plus setup, targeting this high right here because of this fair value gap. Now I was talking about higher time frame Fibonacci pulls. So I wasn't paying attention to this, and I would take a trade, but I mean it's not high probability day, and I've already have a win on the day, so there's not a need to if I want to follow my rules. And then what do we hit? Do we hit this high? We already hit this high right here. We've wicked this high through this candle. It looks like price still wants to move higher based on this. We also are we're only at 10:30. So where do we make lows here? 10 o'clock low. That's nice. Yeah. I wish I was paying attention to that. That would have been nice to get in. If you are starting out, how you doing, Ro? If you're starting out, here's something that I would recommend. I would mark up your chart just like this. With this fair value gap and this fair value gap right here. Snap this and then write out what happened and why this was a potential entry and opportunity to take, so that you are solidifying it in your brain and you have data to back it up, so the next time you see it or the next time it presents itself, you can say, hey, I've seen this before. This is a potential entry. If I was not talking about the higher time frame, I saw this redelivery of this bounce on this 1 minute fair value gap, and then the breakthrough, especially with the strong candle right here, this I would have taken this entry. That would have been 10 handles for a stop loss. If you were to just target this high, that's only 7.5 points. So when we hit that high, I would have just moved my stop to break even. And it would have not been hit. And I would have target either this high or this high right here. And that would have been 20 handles. That would have been a decent move. Decent move right there, my friends. Decent move. So make sure you mark this. Take a screenshot of this. Screenshot this so you can put it in your notes on why this isn't this was an A plus setup. Here's why. We made a low. We didn't make the lowest low of the day, but we entered into this daily fair value gap. We made a higher low, which makes this a B plus setup. I'm not interested in that. We come back up, we come down. Remember I said we were bouncing between these? I was talking, I wasn't looking for a trade. We bounce off this fair value gap, and then we were aggressive in this candle in the next one and close above it. That makes this more of an A plus setup, targeting this high or this high. If I'm going to participate in this trade has moved nicely in this direction, and we could move higher. We could. We've seen enough price action moving higher. It tells me that this is intentional. However, if I'm going to participate in this, I want it to come back down in this area aggressively. I want it to scare buyers that are in this long. For people that have got in here expecting it to go higher, I would love to see a hard red candle just dropping and then stopping on a dime in this 5-minute fair value gap, and then consolidate for a minute or two and then start moving higher. I love those types of entries to go longer. That's what I would look for, and that would give me some probability that we may move higher, especially if we leave these equal highs here. Leave these equal highs, leave this fair value gap, and not actually touch these. It becomes less probable for us to hit all the way through these, grab the liquidity up here, and then come back down. That's not as interesting. We're just waiting right now, guys, to see what price wants to do. All right, it's 11 a.m. here. Tends to be, or top of the hour, tends to be some type of animated type of candle. Tells us what price may want to do. So we respected this 15-minute SIBI. We have this 15-minute BISI. See how price wants to come into it. Okay, I'm watching this. I'm watching this breaker bar here, but the breaker bar actually is this whole candle right here. That's the breaker bar that I'm watching. Let's turn that orange. We can get rid of this. And we'll get rid of some of these down here just to clean up the chart here. All right, we closed at the top of this 5-minute here. The low of this breaker, we haven't closed below it, but as soon as we close below it, the breaker idea is gone. That's the extent of my breaker. So in 16 seconds, if we close below this breaker, my idea of using it as a reason to go higher is now gone. And it looks very unlikely that we're going to respect this. If that's the case, I take it off my charts. Okay. So price does not look like it wants to go higher at this time. We are redelivering. We are here. We still have 12 minutes on this 15-minute candle to see if it wants to respect this, but I doubt that's going to be the case. This looks pretty aggressive. So we were looking for higher prices, didn't get it. We have this high, low, higher, high, and this traded lower. This is why understanding your bias is so important. Look at this candle at 11:01. We break lower and we wick back up and we tag it to the tick of this breaker, and then we move down aggressively. Having your draw on liquidity correct is so important. We've disrespected this. Let's look at the 5 minute. Where are we on the 5 minute? We got a minute left on the 5 minute candle to see if it wants to respect either of these blue boxes, which is our 5 minute fair value gaps. Yeah. Now you're probably thinking, man, this guy has no idea what he's talking about. I mean, he was looking for a long, now he's looking for a short. But you need to remember, this is a seek and destroy day. This is the epitome of seek and destroy price action. It's not reliable. It can go either direction. It's just here to grab your stops, take your money, and why I'm so slow at wanting to get in. I lay out what I want to see happen very specifically, and if it doesn't happen, I'm not going to participate in it because I can't trust it. So we just wick below this swing low into this 1 minute fair value gap, and I'm just going to guess we're probably not going to go for these lows. Even though you have such aggressive candles, my guess, I'm not trading it, is something I'm going to watch. My guess is we don't run for these lows. I'm going to put this on here. Right there. My guess is we are going to bounce there. Because it's a Friday, it's a seek and destroy day. Anybody, any retail trader seeing this is like, dude, look how aggressive this is going. This is going for it. I've taken this. I've taken that many times. But I've just started to notice on seek and destroy days, it'll go for the lowest fair value gap, and then it just turns and goes the other direction. I could be wrong, but this is just a guess based on the day that we're looking at. It is obvious that we have high resistance conditions. Yeah, I mean, you can call it high resistance. I just think it doesn't want to run anywhere because it already achieved its weekly objective, I should say. Yeah. Sorry about that. We got 10 more minutes in this macro. I want to see how it plays out, and I'll probably be done here in a few minutes. Be done on the day. Another reason why I didn't take this, I'm talking to myself, and you guys just get the benefit of hearing my internal thoughts. All the reason why I didn't take this short is because we were obviously looking for a long, so we missed this, But even if I saw it, I'm not sure I would have taken it, because the probability ICT talks about is if you can see a trade going either direction, stay out. If the probability is 50-50, stay out. You want to have no other reason why price could actually go lower. You're looking at this going, okay, is there any reason price could, if we're looking at this breaker, price would want to go higher? The answer for me was yes. We have this 5 minute, this 15 minute. We had this 5 minute break, this 5 minute breaker that it could bounce off of. There was probability that it could still want to go higher because we didn't tag any significant level up here. So when you have probabilities for a bullish move and bearish move all in the same price action, it's better to stay out and wait for something more probable. The number one reason I have struggled in my trading is because I have not been patient. Hands down, the number one reason is because I have not been patient, being willing to wait, because it is the hardest thing to have self-control to say, Tyler, stay out of the market, do not get in a trade, keep your hands off the trigger. It is the hardest thing to do. It really is. It really is. There's 50% of this move right there. From this high to this low. We'll see if it wants to find support here or if it wants to, find resistance here if it wants to continue higher. We could also look at your fib retracement levels. If you look at this, we have our 61%, our 70%, and our 78% levels. This is ICT's optimal trade entry. If you're bearish, which I am today, you can use a retracement level of 70% and see if it overlaps with any other confluences. This one looks really nice. I'm not going to lie. It's overlapping the breaker and it's sitting in a beautiful position. As long as we don't rerun these lows and we do this within the right timing, in the right time, this would be an interesting trade. More than likely, we're not going to get this, but just as a training purposes, if this comes up in to this level between, let's say 10:45 and 11:15, or within the top of the hour of that time frame, this becomes attractive, especially if your bias is bearish. So it's probably not going to play out right now because it's 11:10, 11:11. We got a few more minutes in this macro. The move already happened. It could come back up before the lunch hour. We don't know. That's the thing with ICT, man. There's so many things that you can look at, you can consider. You don't need all of them. You just need a few. And using some at different times and points of times can be helpful because a fair value gap might be very important in one instance, an inversion gap might be important in another. An order block or a breaker, mitigation block, all of these things you can use at different times. If you try to use them all at the same time, you're going to get in analysis paralysis and you're going to end up doing nothing. So you just got to find the things that give you enough confidence to want to pull the trigger, and don't overkill on it. Don't go overkill on it. Find the stuff that makes you confident and then go ahead and execute on that trade. Well, guys, if you liked the stream today, consider giving me a like on the stream. I'd really appreciate it. Put in the comments your thoughts, any feedback you got for future streams. I would greatly appreciate it. I'm going to sign off today. It's been about 2 hours. We're coming into the last 45 minutes before the lunch hour. I'm going to be done for today. I plan on joining, doing this again next week, at least 2 or 3 times potentially. A couple of those days I just can't trade in the morning because of other obligations. So thanks for joining me today. I really enjoyed today. It was a great interaction on the chat. I'm definitely going to check out this what is the #1 day trader on YouTube. So I'm going to be checking that out. And we will see you guys next week. Have a great weekend. We'll talk to you soon. Take care.